Have you ever wondered how the multifamily real estate market is performing in New York City? Well, the latest data reveals a significant uptick in building permits, marking the highest level since 2008. Welcome to the Multifamily Real Estate Insights podcast. I'm your host, Sandy MacKay. Let's get right to it. Amanda Schiavo from the Commercial Observer reports that the number of multifamily housing construction permits across New York City rose dramatically in the first quarter of 2025. According to the Real Estate Board of New York, there were 6,871 proposed multifamily units across 123 buildings. This represents a 65% increase from the fourth quarter of 2024 and is 58% higher than the overall average units proposed since 2008. Brooklyn leads the charge with permits for 3,080 units across 44 buildings, followed by the Bronx with 2,358 proposed units. Queens and Manhattan had 1,049 and 384 proposed units, respectively, while Staten Island had no proposed multifamily units. A significant portion of these proposals were concentrated in buildings with less than 100 units. The shift towards smaller projects is partly due to changes in tax and land use policies. In early 2024, New York State lawmakers introduced the 485X tax abatement to address the housing crisis, offering tax benefits for developing affordable multifamily housing. However, buildings with 100 or more units face hefty construction wage requirements, leading developers to target projects with 99 or fewer units. Overall, new construction activity across all asset classes in New York City increased by 15% year over year, despite a 9% drop from the fourth quarter of 2024. The total square footage of proposed construction projects for the first quarter of 2025 was 8 million, which is a 26% rise from the first quarter of 2024. However, it remains 36% lower than the historic average since 2008. Zachary Steinberg, REBNY's Senior Vice President of Policy, stated that the uptick in development activity provides a crucial boost to the city's housing pipeline and overall economy. However, he emphasized the importance of state and city policymakers doing more to support the housing market amid rising costs and policy uncertainties. Institutional Property Advisors, a division of Marcus and Millichap, recently announced the successful sale and financing of Urbana, a luxury mid-rise multifamily asset located in Seattle, Washington. This property, situated at the intersection of Northwest Market Street and 15th Avenue Northwest, is a 289-unit, 7-story building featuring 29,884 square feet of street-level retail space. The sale highlights the thriving real estate market in Seattle, particularly in the highly sought-after neighborhood of Ballard. Urbana stands out as a LEED Gold certified building, offering residents a premium living experience with sophisticated unit finishes and an array of amenities. Giovanni Napoli, executive director at Institutional Property Advisors, emphasized the property's strategic location, which provides residents with easy access to some of Seattle's most popular restaurants, breweries, and nightlife options. Moreover, major employers like UW-Medicine, Amazon, Google, Meta, and the Bill and Melinda Gates Foundation are within close proximity, adding to Urbana's appeal. The sale was facilitated by a team from Institutional Property Advisors, including Giovanni Napoli, Philip Assuad, Ryan Harmon, Nick Ruggiero, and Anthony Palladino, who represented the seller, Equity Residential, and procured the buyer, Carmel Partners. The financing aspect of the transaction was managed by Brian Eisendrath and Cameron Chalfant of IPA Capital Markets. Chalfant noted that despite market volatility, they secured highly attractive terms from the lender, showcasing the asset's strength and the sponsor's proven track record. Built in 2014, Urbana offers modern amenities such as 2 rooftop decks, a resident lounge with a theater, a dog run and pet spa, bike storage, and a gated parking garage. The apartments feature efficient layouts and open kitchens with finishes inspired by Ballard's waterfront locale. The retail component includes tenants like Verizon Wireless, Papa John's, Five Guys, and Planet Fitness, further enhancing the property's value. Marcus Millichap, a leading national brokerage firm, continues to play a pivotal role in the commercial real estate landscape. As of December 31st, 2023, the company had 1,783 investment sales and financing professionals across over 80 offices, completing 7,546 transactions with a sales volume of approximately $43.6 billion in 2023. Institutional Property Advisors, as a division of Marcus Millichap, leverages its expertise in real estate investment and capital markets to provide tailored solutions for institutional properties. In Cobb County, Georgia, officials and school leaders are engaged in an ongoing discussion about the implications of the increasing number of multifamily housing developments. According to a report from Fox 5 Atlanta, Cobb County has approved more multifamily housing permits than any other county in the metro Atlanta area. This surge in development has sparked a debate over its potential effects on local schools and district resources. Some district leaders are expressing concerns that the influx of new apartment and townhome communities could lead to overcrowded schools. The rise in student enrollment associated with high-density housing might stretch existing resources and necessitate costly expansions to accommodate the growing numbers. On the other hand, there are voices in the community who argue that these developments are necessary to meet the rising demand for affordable living spaces. Proponents highlight the potential economic and social benefits, including increased access to affordable housing and the revitalization of neighborhoods. The recent study, presented during a school board meeting, has intensified interest in planning for the future of the school district amidst this residential boom. District leaders acknowledge the need to monitor enrollment trends closely and collaborate with local governments to manage growth responsibly. This ongoing dialogue will be crucial in balancing the needs of the community with the resources available. Thank you for listening to the Multifamily Real Estate Insights podcast. I'm your host, Sandy MacKay. See you on the next one.